Hello students, welcome to my channel Sparkle Mind Classes. In this video, we will see the solution for August 25 Senior Grade Exam Paper 2 Solutions. Paper 2 contains Part A 15 questions and you have to answer all the questions, and Part B contains 6 questions and you have to attempt any 5, and Part C out of 3 questions you have to attempt any 2 questions. In this video, we will see the solution for question number 24. All the best. Share my videos to your friends. Subscribe my channel. So, Sun Limited and Moon Limited are two companies carrying on business in the same line activity. Their balance sheet as on 31/12/2024 is given as below. Liabilities: Sun Limited, fully paid equity shares of 10 each 6 lakhs, general reserve 4 lakhs, secured loan 6 lakhs, current liability 6 lakhs, total 22 lakhs in liability side. In the asset sides, land and buildings valued at 1 lakh, plant and machinery 7 lakhs, investments 1 lakhs, stock 9 lakhs, debtors 3 lakhs, cash at bank 1 lakhs, totally 22 lakhs. Like that, Moon Limited, fully paid equity shares of 10 each 2 lakhs, general reserve 2 lakhs, secured loan 1 lakh, and current liabilities 4 lakhs, totally 9 lakhs. In asset side, plant and machinery is given 3 lakhs, stock 4 lakhs, debtors 1 lakh, cash at bank 1 lakhs, totally 9 lakhs. The two companies decide to amalgamate into Mars Limited. The following information is given. All assets and liabilities of two companies are taken over. Each share in Moon Limited is valued at 25 rupees for the purpose of amalgamation. Shareholders of Moon Limited and Sun Limited are paid off by issue of sufficient number of equity shares of 10 each in Mars Limited as fully paid at par. Each share in Sun Limited is valued at rupees 15 for the purpose of amalgamation. Show the journal entries to close the books of the accounts. In this case, two similar companies are merging together to form a new company. That is, Sun Limited and Moon Limited merging together and a new company, Mars Limited, is formed. In this case, the two companies should be dissolved and new company is formed. So, first we have to do realization account. And then value of here shareholders of Moon Limited and Sim Limited are issue of sufficient number of equity shares of 10 each in Mars Limited as fully paid at par. Here, before we have to prepare journal entries, we have to prepare realization of Sun Limited and we have to calculate the purchase consideration. So, purchase consideration is net payment method. It is rupees 15 per share. That Sun Limited company shares are valued at 15 rupees for the purpose of amalgamation. So, in Sun Limited has 60,000 equity shares are there. So, value of equity shares in Suns Limited is 60,000 into 15, 9 lakhs. Here, value of shares in Mars Limited. In Mars Limited has 90,000 shares at par value 10. So, value of one share is also 10 rupees. Therefore, purchase consideration is 90,000 shares. So value of shares in by Mars Limited is given 90,000 shares for Sons Limited. So first we have to prepare the realization account. You know that realization account, all assets at book value including goodwill should be transferred to debit side of the realization account as the book value. Like that, all third parties liabilities, here secured loan, current liabilities, should be transferred to the credit side of the realization account. And then value of purchase consideration given by the Mars Limited is 9 lakhs. So tallying on both sides, we get loss on realization 1 lakh for Sun Limited. This 1 lakh is transferred to the shareholders of the Sun Limited. Like that, value of Moon Limited. Moon, each share of Moon Limited is valued at 25 for the purpose of amalgamation. Already number of shares in Moon Limited is 20,000 shares. Hence purchase consideration is 20,000 into 25, 5 lakhs. So issued at a par value of 10 rupees. 50,000 shares are issued to Moon Limited by Mars Limited. So realization account of Moon Limited. Like that, all assets of Moon Limited are transferred to the debit side of the realization account as per the book value. So to plant and machinery 3 lakhs, stock 4 lakhs, to debtors 1 lakh, to cash at bank 1 lakh. Here third party by secured loan 1 lakh, current liabilities 4 lakh, Mars Limited purchase price given 5 lakhs. Comparing on both sides, 1 lakh profit, realization profit in Moon Limited. This should be transferred to the shareholders of the company. So, equity shareholders account limited of Sun Limited. Here, general reserve should be transferred to the credit side. Then realization loss to debit side 1 lakh. Shares in Mars Limited is given 9 lakhs. So, here equity share capital 6 lakhs. Both side we upgrade 10 lakhs. We will prepare the journal entries. Realization account data are 22 lakhs to land and building, 1 lakh to plant and machinery account, 7 lakh to investment, 1 lakh to stock account, 9 lakhs to debtors account, 3 lakhs to cash account, 1 lakh, being transfer of assets to realization account on debit side. Like that, secured loan account 6 lakhs, current liabilities 6 lakhs to realization account. All liabilities should be credited to the realization account. Purchase consideration, Mars Limited account debtor to realization account 9 lakhs. So issue of shares. Shares in Mars Limited account 9 lakhs to Mars Limited 9 lakhs being purchase consideration received. So equity shareholder account debtor to realization account 1 lakh. Loss on realization transferred to debit side. So then journal entries in the books of Moon Limited. So realization account debt are 9 lakh, to plant and machinery account 3 lakh, to stock account 4 lakhs, to debtors account 1 lakh, to cash account 1 lakh, being assets transferred to realization account. So you know that the rule for realization, first all assets including goodwill and cash should be transferred to the debit side of the realization account as their book value. Like that, all third party liabilities should be transferred to the credit side of the realization account as their book value. After that, any realization amount should be transferred to credit side. Any settlement should be transferred to debit side. Here, Mars Limited account debtor to realization account. P is purchase consideration receivable. Then realization account debtor to equity shareholder account. Profit transferred to the shareholders. Like that, general reserve account debtor to equity shareholders. General reserve profit and loss account should be always transferred to the shareholders. Equity share capital account debtor to equity shareholder account 2 lakhs. Equity shareholder account 5 lakhs, to shares in more lakhs 5 lakhs, being final settlement of equity shareholders account. So equity shareholders account ledger. By realization loss 1 lakh, profit transferred, general reserve transferred 2 lakhs, equity share capital 2 lakhs, so 5 lakhs. Debit side to shares in Mars Limited 5 lakhs. Thank you.